So Nifty fell below 10,800 yesterday. Sensex took a dive of 770 points, and today all around us is negative news. Markets are in a bearish trend, and well, there is news that we might continue into a bearish market for a long period of time. So a lot of our students and clients are asking us what to do. Should we be worried or not? What exactly is happening? I'm here to tell you bear market can be one of the best opportunities for you to make money. So keep watching this video to know exactly what you can do to make money or save money in the bearish market. Okay, so before I start, I want to tell you whatever techniques or tips that I'm going to give you to make sure that there is money coming in the bear market as well. For that, you require certain prerequisites. First of all, you need to have a portfolio of fundamentally strong stocks of different sectors. So if you have a portfolio in which you already have put money into only one or two stocks, then this may not be the right kind of way to go about it. Okay, at the same time, you should have knowledge, at least basic knowledge of technical analysis, fundamental analysis, and a strong understanding of how derivatives, futures, and options work. Once you have that, only then you can implement these techniques. Okay, so let's move into the three phases of a crash or a bear market and what you can do. The first part is what to do before the crash. So even before the crash is coming, there are some signs given, and maybe you're worried that the market is going to take a steep fall and it's not started yet. At this stage, the simplest thing you can do is one, buy a put. Now put option is nothing but an insurance that you can buy on your entire portfolio. Students of futures and options will understand how that mechanism works. So once you buy a put, if the market crashes strongly, you will get money from the put seller, and that's how you can insure your entire portfolio. The second way to insure your portfolio is again using futures, where you don't where you don't pay a premium, you directly put in a margin and short your futures. So if the Nifty, short Nifty futures. So if Nifty falls, again the money will come from shorting Nifty futures. Okay, these are the two techniques which will make you money. You have to be prepared before the crash. So if you're prepared, as soon as the crash takes place, you will be pocketing some profits. Now, keep in mind if the market goes upwards, of course, your portfolio will start rising up, but these positions might start making losses. So, you have to manage them and square them off at the right time. And lastly, you can also do some intraday short selling. So if the negative sentiment is already there, these are the best times when you can do intraday short selling of stocks as well in small quantities or large quantities, whatever you prefer. Okay, so I don't recommend intraday trading every day, but when the situation is really bad, you know the entire sentiment of the market is bad. What you can do is you can use that to do an intraday trade on falling stocks and make some profits from there as well. Now let's come to the second phase. If the market is already now in a falling direction and it continues to fall, you can obviously apply the previous two methods as well, continuing to buy puts and sell futures, or even do intraday trading for short selling. But during this time, what I recommend is you can also start accumulating some stocks in small quantities. Okay, when I say small quantities, maybe increase the positions by 5, 10, 20%, not more than that. Don't buy in large quantities because you don't know how far the market is falling. It may take a rebound anytime, so it doesn't make sense. But since the market is falling and the price of your stocks is already down, the average cost of buying will keep going down as you slowly accumulate those fundamentally strong stocks. And the second thing which you can do is, as the market continues to fall down, you can also sell a call and collect premium on your entire portfolio. I recommend selling Nifty calls at out of money calls, which is also known as a covered call strategy, in which if your portfolio is not going up, that's fine, but you can keep collecting premium till the time market doesn't turn around. You can do this month in, month out, till the time every time the market is falling, you will keep getting premium. Although it's a small quantity, but you can get consistent income from there as well. Again, keep in mind selling call has got unlimited losses involved in it, so be sure to square off your position if the market turns around suddenly, and be very clear of your positions and how to handle them based on technical analysis and understanding futures and options. And finally, once the market is crashed down, there's just pure negative scenario everywhere and a bottom has been hit. It has come to a level where it cannot turn around further. Although it's very difficult to detect when that bottom will come, but there will come a time when the market has gone into a despair and there's just pure negativity. This is where real investors and professionals shine. You can now start accumulating your favorite fundamentally strong companies at a very cheap rate, at a very cheap cost. The keyword being fundamentally strong companies. So search for them, look for great companies and buy them in bulk. This is a time you can just buy in bulk because the cost is already low, and that is why you end up having a strong portfolio. And whenever the market turns around, and as it's a cycle, if it's going down someday it will come up as well. There is no prediction of when, but it will come up, and when it comes up, since you've bought those stocks at a very cheap cost, you'll be profiting very very soon, as soon as the market turns around. So these are some of the tips that I gave you to work around the bearish market. You have to have loads of patience and knowledge and confidence in your stocks to sail through this. Coming scenario for Indian market doesn't look good. You'll have to look for good economic indicators, and you need to have we need to have a really good news to see the market turn around. So till then, be prepared with these tools. I recommend going through our courses to understand each and every concept of technical, fundamental, and derivatives to make sure that some of the other money is coming in during this crash as well.